You've got $140,000 in the bank. You're paying $5,550 a week in rent, and you're looking at a $700,000 apartment in Sydney. Should you buy it? Or should you keep renting and invest that deposit in the stock market instead? Every Australian renter asks this question. Your mate says rent money is dead money. Your parents say just get on the property ladder. But here's the truth. This isn't an emotional decision. It's a math decision. And today, I'm going to show you the exact Excel calculator that I use with my clients, the same one financial advisors charge $500 an hour to build. By the end of this video, you'll be able to plug in your numbers and know with actual data whether buying or renting makes you more money over 10 years. And yes, this is built for Australian conditions, stamp duty, LMI, the whole lot. Let's walk through it together. Section 1. Why most online rent versus buy calculators fail. Before we dive in, I need to explain why most online rent versus buy calculators are useless, especially for Australians. Problem number 1, they ignore stamp duty. In Sydney, stamp duty on that $700,000 property is about $28,000. That's not pocket change. That's money you never see again. Problem number 2, they treat your deposit like it disappears. But if you rent, that $140,000 isn't sitting under your mattress. It's invested, growing, working for you. Problem number 3, they forget that homeowners pay ongoing costs too. Council rates, strata, maintenance, that dead money argument, homeowners have dead money too. The calculator I'm about to show you fixes all of this. We're comparing apples with apples, the wealth of a buyer versus the wealth of a renter, side by side, year by year, for 10 years. Section 2. The input section, what you need to enter. Here's the calculator. Let me show you the input section first. Everything in yellow is what you need to enter. Everything else calculates automatically. At the top, you put in your numbers. Property price, we're using $700,000 for this example. Your weekly rent, let's say $550. Your available savings or deposit, $140,000. How many years you want to compare, we'll use 10 years. Then the assumptions. Loan term, standard 30 years. Interest rate, currently around 6.2%. Property growth, historically around 3.5%, but you can change this. Rent increase, expect about 4% each year. Investment return, if you rent and invest, what return would you get? We'll use 7%. These 4 percentages are the dials that control everything. Change these and the answer flips completely. Section 3. The Australian costs, what buyers actually pay. Now here's where it gets Australian specific. Look at the purchase costs section. Stamp duty, for our $700,000 example in New South Wales, that's around $28,000. You need to look this up for your state. Victoria is different from Queensland. I've put links in the description to each state's stamp duty calculator. Conveyancing and legal, about $1,500. Building and pest inspections, around $800. Never skip these. Lender's mortgage insurance, if your deposit is under 20%, you'll pay this. The calculator estimates at 3% of the purchase price. In our example, with a 20% deposit exactly, it's zero. Total upfront costs, for this example, about $30,300 on top of your deposit. That's $28,000 stamp duty, plus $1,500 legal, plus $800 inspections. Then ongoing costs every single year. Council rates, about $2,500. Home insurance, $1,200. Maintenance, budget 1% of the property value, so $7,000. Strata, if you're buying an apartment, around $4,000. Total annual ownership costs, around $14,700 every year before you've even paid a cent of mortgage interest. Section 4. The key calculations, how it works. Now for the engine room. This is where the calculator does its magic. Loan amount, purchase price minus your deposit, $560,000 in this case. Monthly mortgage repayment, the PMT function calculates this, around $3,430 per month or $41,158 per year. Total annual buying costs, mortgage plus all those ongoing costs, $41,158 plus $14,700 equals $55,858 per year. Annual rent for year 1, weekly rent times 52, 550 times 52 is $28,600. Here's the critical number. Initial investment for the renter. This is your deposit plus the purchase costs you didn't have to spend. $140,000 plus $30,300 equals $170,300. The renter invests $170,300 from day 1, while the buyer spends it on stamp duty and fees. Section 5. The 10-year projection, watching the money grow. Let me show you what happens year by year. Year 0, the property is worth $700,000. The renter invests $170,300. Year 1, property grows to $724,500. Rent paid is $29,744. The renter's portfolio grows to $209,479. Year 2, property now $749,858. Rent increases to $30,934. Renter's portfolio hits $250,256. Year 9, property $954,028. Rent $40,707. Renter's portfolio $586,381. Year 10, property reaches $987,419. Rent is $42,335, and the renter's portfolio, $642,579. Each year, the renter's money grows at 7%, plus they save the difference between what they would have paid as a homeowner and what they actually paid in rent. That gap starts around $27,300 in year 1 and grows each year. Section 6. The final answer. Who wins? After 10 years, we need to calculate what the buyer actually keeps after selling. Selling costs, agent fees at 2% plus legal fees. On a $987,419 property, that's about $20,748. Loan after 10 years, the CUMPIN function calculates how much principal you've paid. Your remaining loan balance is around $471,119. Now the moment of truth. The buyer's wealth, property value minus loan minus selling costs, $987,419 minus $495,552 minus $20,748 equals $495,552. The renter's wealth, the investment portfolio value, $642,579. The difference? $147,227. That's 125% of your original deposit. In this scenario, with these assumptions, renting and investing beats buying by almost $150,000. But watch what happens when I change the numbers. Change property growth to 5%. Now property grows at 5% instead of 3.5%. The buyer's wealth jumps to $645,303. Buying now wins by about $2,724. Change investment return to 5%. Drop the investment return to 5%, and buying wins by over $90,466.